traders, and welcome to another video review. Today is Tuesday, November 26, 2024. Let's find out what is going on the Forex economic calendar for today. Not too much information during the overnight Asian data. Today, during the London session, we got some comments. First from the Bank of England MPC member Peel, then a ECB member McCall will give a speech, and then we'll just smoothly drift towards the US session. Building permits are scheduled for release at 2 o'clock. From the US, wholesale sales are scheduled for release at 2:30. This data are from Canada. HPI composite indicator is scheduled for release at 3 o'clock. 1 hour later, we got the consumer confidence data scheduled for release. This is 4 o'clock. At the same time, we got new home sales data released from the US as well. 3 hours later, we got 5-year note auction, and at the 8 p.m. we got FOMC meeting minutes data release. At 10:30 p.m. we got API crude oil stock data release. So as you can see, the most busiest time of the trading day is during the US session. Important data releases are building permits, consumer confidence, new home sales, and the FOMC meeting minutes. Let's just now take a look at the charts, and we are going to start with the euro dollar. The 4-hour chart of the euro dollar is showing us the termination of the 5-wave impulsive structure to the downside, with the local low and the swing low at 1.0334 and then a bounce. Now let's take a look at this bounce, because we broke above the technical resistance at 1.0498. So let me just figure it out what is going on. Here it looks like we might hit some sort of the Fibonacci retracement during this movement to the downside. So if we take our Fibonacci retracement tool, we can clearly see that from this swing to this low, so all the way 5 was retraced. As you can see, we retraced even more than 61% of the whole wave 5. Not very much, nevertheless this is still 25 pips above the 61%, so it looks like the bulls are getting stronger here as they retrace so much. So now, after this 5-wave impulsive structure is completed, maybe, possibly, just maybe, but we might see some sort of the larger than expected ABC correction. So what do we have here is apparently a local trend line. Let me just make it here. There you go. And the first wave of the correction is done, right? So it doesn't actually looks. It looks kind of impulsive. It might be zigzag correction. It doesn't actually looks like it's completed just yet, the whole ABC structure. Nevertheless, that's the reason why we are going to name it. Okay, so maybe something like this is being right now in progress. This scenario is looking for the wave A, B, and C to the upside, and right now wave B is now either finished or it's underdeveloped, because the momentum is still quite negative. Nevertheless, there is still wave C to the upside that needs to be completed, targeting the previous wave 4 of the lesser degree, 1.0611 high. And that's the British, that's the euro dollar. Now dollar to Japanese yen. As you can see, we are trading inside of the channel, right? We all know this. Now we are now testing the middle of the channel after the market has made a blown off top at the level of 156.76. Let me just take a look a little bit more at the current situation here. Momentum remains negative. Let me just place the line at the level of 50. So this is the level of 50, let's say, and the momentum, as you can see, is still below the level of 50, as this slight price action is being developed. If we take the trend line from the last swing high to the recent price action, okay, let's label it as orange, we can clearly see that the market is trading below this trend line, below the 50 periods moving average, and just above the 100 periods moving average. We got our trading range. The range is from the technical support at 153.30 and towards the local high at 156.78. So now this situation here is telling us that the market might be ready to rally even higher. However, we need a breakout to the upside. To be, of course, completed. In order to do this, the momentum must break above the level of 50 and rally towards the level of 70. So we got this movement back to the upside. It's rather easier for the market to rally higher than to move lower, because the previous trend in the background is, of course, to the upside. So it's easier for the market to continue this trend than to reverse and move the other way. So the outlook remains bullish as long as we stay above 153.30. Let's take a look at the gold market, because we got very nice reversal. The reason for that is we broke above the level of 61% of the Fibonacci retracement, 2693, and we went as high as 2720. So that's a kind of a significantly higher. Okay, of course there was a situation with the extremely overbought market conditions. Now we are below the level of 50, narrowing towards the level of 37. So definitely what we should do is to label this level here as a swing high, 2789. We know it. Now what we should do is to label this this high as well. It's not actually any kind of a technical support or resistance. There must be something else why the market went here. 2720, and now very sharp reversal. This movement here looks pretty much impulsive, which is even more concerning. Nevertheless, we need to see what the market will do next in the nearest future. We got our range, the recent movement to the downside. Let me just see how much did we actually retrace to the downside, right? So from the lows to the highs, we retraced already 61%. We retraced 61% of this wave to the upside, right? So we got very sharp movement to the downside, and the market might be ready to move higher. However, we cannot break below 2604. That's a temporary, of course, low. That's the level, almost the level of 61% of the Fibonacci retracement. So any extension to the downside would be very negative for the bulls, and that eventually means that we will again test the lows of 2536 one day. So we need to move higher. If this is impulsive wave, we cannot retrace that deep in the gold market. Just because we are below, we are waiting for the data from the crude oil market. Let's take a look at this commodity. What do we have here? Again, very nice movement to the upside, back up towards 71.49, 71.50. We broke above this technical resistance. Nevertheless, very sharp reversal below the level of 69 dollars. Momentum below the level of 50 again. So this is very nice price action here. So let me just point it out. There you go. During the up movement, we broke above the level of 50 on the RSI. We've been moving still above the level of 15 during the movement continuation, and then when we smashed the technical support at the level of 69.74, we broke back below the the level of 50, and we are now trading inside the bearish territory. So the outlook here remains slightly bearish, but we have the ranges here. The one is 72.66 and the lows is now 66.72. It's been tested plenty of times, this low. So we might see in the future another test, and if there's a breakout, then eventually 65.25 is the next target straight on. And last but not least, let's take a look at the Bitcoin. After hitting the level of 9,660, the Bitcoin is in the correction. The corrective move in Bitcoin is apparently has made its first local low. The local low was made at 92,660, so it's apparently already $7,000 lower. Let me just place it. There you go. And the movement to the downside continues. There's still room to the downside here and there's still room to the downside here. As I said, most probable level when we will of course that we will hit is 88,752, because that's the basically kind of a middle of this triangle area, which is the previous wave 4. So there's still room to the downside on the RSI. There's still room to the downside here on the Bitcoin 4-hour chart. Right now we continue to the corrective movement on the Bitcoin, and we should expect lower prices. We will see how much the Bitcoin will go, how much to the downside Bitcoin will go. Eventually we are already few percent down. There you go, 7% down from the all-time high already. But this correction is healthy. This correction is needed. When we hit the extremely oversold conditions, the market will be ready to continue the uptrend above $100,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.